Hello, this is the Trade Site U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Tuesday, the 3rd of January, 2017, and ending Friday, the 6th. This is just the preview for this week. I still plan on doing a year in review recap of the various markets that I will post at some point this week, just to have everything so you can always check back. We like to be able to catalog everything that happened in the markets and everything that we did here at TradeSite. So we've got a long track record at this point. Here's a look at the ES front month futures contract. This is the daily chart of the S&P in futures form. You can see that we're started to roll over a little bit here. Now we've been flat for 2 weeks for the holidays until basically the last couple of days here. Starting to roll over, obviously extended. We've talked a lot about the fact that when these stocks shot up, like for example Goldman Sachs, which I bought some puts on here, had a big end of year. Nobody's going to sell this stock and lock in the tax gain. All the hedge funds that own the stock wanted to print as high as possible for the close of the year because they're paid their bonuses based on this. So nothing was going to sell off really, but you did start to see some signs of very late on Friday, just some movement to the downside, perhaps some people getting out ahead of that. Remember, now you can start selling your stocks and not pay taxes until April 2018. So it's a big change in the ability to sell these things that are up so much for the year. And that's basically the bank stocks and a couple of tech stocks. Everything else, not so much. Here's crude oil down 5 cents to 53.72, still very near the highs. Gold dropped back $5.80 on Friday to 11.5230. That's after the buy signal that you can see, the 13 buy signal that we got back 2 weeks ago that caused the curl up. Here's the S&P cash index. Now this is where it's interesting, right? We had the 13 sell signal right at the top, the top day there 2.5 weeks ago. Hadn't really rolled over. We talked about why just a minute ago, but now starting to roll. And the dotted line is the static trend line that's currently in place. That could be the target. Obviously, 9 bars down to the other side here. We've only 3 down so far. Could be the target, but this is definitely the sell signal playing out as it should. So it'll be interesting to see where this takes us. Now, the NASDAQ side, a little more interesting. NASDAQ side, not that much higher than it was on election day. Matter of fact, we've almost touched the low on Friday, touched the high of the day after the election. So this is kind of interesting to see that the NASDAQ really hasn't gone anywhere in the last 2 months. The stock's down 14. It's the one part of the NASDAQ that's been higher. The semiconductors have been helped out here, but the biotechs, on the other hand, which gapped up big after the election, have done nothing but sell off ever since. So we're at new lows since that point. VIX climbed back a bit up to 1404, up 67 cents. It's going to be a real interesting start to the year. I mean, if this ends up getting negative because people can sell now, this could get pretty ugly pretty quick. So just be aware that there's a lot of volume in the market up high. We'll talk about that in a minute. The trend gets a high reading of 1.76, takes the 10-day moving average up to 1.23, one of the highest points it has been in a while. NASDAQ volume on Friday was only 1.4 billion, a little better than the rest of the week. That's just because the last day of the year there is some movement for end of quarter and whatnot. But everybody's been gone the last week. Let's face it. I do want to talk about the fact though that if you look at this Nasdaq volume since the election, right, volume's been up. We've had a lot of days over 2 billion shares. And if you go and take a look at the market, remember the S&P. So what you're really going to get here is a lot of people in the market here at the highs. And if realistically there just wasn't a lot of end of year selling because of tax issues, it's going to leave a lot of people trapped if we start to roll over. Remember, if the S&P here gets down to around, let's call it, we're at 2238. Let's just say we go back under about 2175, which is only 60 points. That means most of those people that are in the big volume that we've seen are all underwater. That's what starts these rolls. So let's be real cautious and aware of those levels. Advanced decline ratio was negative 799 on the NASDAQ on Friday, negative 301 on the New York. Obviously not a big deal with most people not trading. Google starts to take a little hit, down 10 on Friday. Apple down 91 cents. It closed out the year near the highs. Amazon down 15. Netflix down 1.5. Tesla down a buck, but it was on the rise in the weeks before here. The other thing too is the bonds. Remember we talked about the fact that the bonds need to bottom out before the market would roll. I feel like the bonds have bottomed here at this point. Dow Jones, which is pretty irrelevant to me, down 57 points on Friday. All right, so let's take a look at the intra-week action here. This is, if I just slide it like this, now you can basically see this is last week, the 4 days of last week. So Monday we gapped up, pushed higher for the first few minutes, made some really good money on the opening range trades and futures this week. 3 out of 4 days green, 2 of them really nice. And then just flat, kind of drifted back, never even filled the gap. Tuesday, small gap up, and then sold off sharply and kept going into the afternoon. Wednesday was kind of the flattest day of the week. I'm sorry, Tuesday was then the first day, then Wednesday. Thursday was the flattest day of the week, and then Friday, little gap up and sold off again. Rebounded a little bit late in the day. You can see that late volume there. NASDAQ side, pretty similar, really. Slide that back. There you go. All right, so let's take a look now at the news that's coming out this week, just so we're aware, because there's some big stuff Friday in particular that we need to know about. So here we go. Monday, obviously we're closed. That's today. Tuesday, construction spending and ISM index 30 minutes in. Wednesday, MBA mortgage applications index. I don't know. That one's new. Crude oil inventories. That's not coming out Wednesday. That's wrong. That'll be on Thursday. Auto and truck sales in the minutes from the last Fed meeting get released at 2 p.m. Thursday, Challenger job cuts, ADP employment change, the weekly initial and continuing jobless claims numbers. And then 30 minutes in, ISM services, an hour in, natty gas, an hour and a half in, there's your crude oil inventories. They move it because of the Monday holiday. Friday, non-farm payrolls, unemployment rate, trade balance, and then factory orders 30 minutes in. We're about 2 weeks from Donald Trump taking office. So the big news is all on Friday. It's the back end of this week that's loaded. And it'll be interesting to see. A lot of times, by the way, this is a settlement thing. A lot of times, whatever the market does the first 3 days of the year, it reverses the rest of January. But it's gonna be real interesting to see if they just come in and sell this off now that they can and get those get out of these positions that have been up for the last 2 months, especially, and not have those tax consequences. So it'll be a real interesting couple weeks. Sometimes the very first day of the year, a little slow to start out, just because people are just getting back into the swing of things. But I do expect Wednesday and Thursday this week, and then Friday with all the data to be pretty interesting. We'll be here, short week. Charts as usual, brought to you by eSignal. If you've not yet taken the trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week in 2017 in general.